gridlock out of Congress and a looming showdown weighing on investors. So if the shutdown actually happens and the ratings agencies follow suit with the U.S. downgrade, what's the trade? CNBC contributor and New Edge senior director Larry McDonald joins us now. Larry, great to see you.
Melissa. If
there is a shutdown, how many days or so on would you then say a downgrade of U.S. debt is more likely?
Well, every week it's about an eighth of GDP. So they're gonna. I don't think we get a shutdown. I think here's what happens. You remember back in November, December, the market bottomed November 16th. We got a deal in December, so the market bottomed first. The near-term vol has been richening, so the term structure, people are paying up for October vol. The November vol is cheaper, so people are paying up for the October vol. I think this is pricing in a lot, and I think what happens is the bill comes back to the House, we get a deal on Monday, okay, that funds the government for at least 40 days. Okay?
This coming Monday?
This Monday.
Okay.
We get the deal. So the market should rally Friday into that because the market always figures it out first. And then we get this deal, it funds the government, then we have to deal with the debt ceiling on the 15th of October.
I see.
So we get a rally in the S&P. I think you fade that rally, you get long vol again because they're going to take it right down to the wire.
So you get a rally into the 15th, which is the deadline after the extension gets passed on Monday.
Yes.
You fade that rally.
You fade that rally around, I would say probably around the 8th or so.
Okay.
And then here's what's going to happen. The president's going to cave on the individual mandate. He already caved on the corporate mandate, in other words, for Obamacare.
Right.
So they're going to push that out a year. I think the president's also going to cave on Keystone. And then the GOP also wants a path to tax reform. So those three things, they're going to really pound the table and really take it to the end. The president, I think, is going to cave and they're going to get a deal. And that's the beginning of a grand bargain, which is very, very
Do we have
bullish.
an inverse trade on the bond side as we are seeing this rally into the 15th?
Bonds have rallied big. As you know, I made a long bond call here around 2.9 to 3%. We get 2.65 this week. I think bonds rally a little bit more and then start to fade as we get toward October 15th.
Hey, Larry, so it sounds like you're saying tactically, for people who are nimble, there's going to be an opportunity to fade a rally, but you're making the case that if Obama caves on some of the individual things in Obamacare and XL Keystone goes through, it's actually a really good buying opportunity if you're bullish on the U.S. economy. So how nimble does one have to be to play that fade? And would you agree, for most investors, they're probably better off seeing right through it and just sitting tight?
Oh, yeah, for the long-term guy, long-term investor watching us right now, I'm talking to clients. ACG Analytics is our partner in Washington. They advise hedge funds on bespoke Washington policy research. This is the advice that we're giving. We think that we get a pump and ball between Monday and the 15th. You're not going to get this out of the president until you really squeeze him, and he's going to squeeze back. So I don't think we get a deal until the 16th, 17th of October.
So with that said, this 1670 level that we talked about, that's in play ahead of this, and then you see rallying to new highs in the S. Am I reading you right?
Yeah, if we get a deal, the relief of this, the one thing that we've seen over the last year is that the power of that QE is always there. So you get these stresses. It's like you take the beach ball, and then once the stress is gone, you just get a natural pop.
Right.
If November vol starts getting pumped up, then you'll revise this thesis. A lot of it is baked based on the fact that all of the vol premium is in October.
Yes.
Okay.
Vol's reaching on the short end.
All right. Larry, great to see you. Thanks for your time. Larry McDonald, New Edge.